You're watching Notepad. I'm your host, Ibrahim Sani. We continue on the theme of post-MCO recovery. There's a lot of items that we need to unpack. One of them is, of course, the investing strategy following a post-MCO structure. One company that I always want to talk about is, of course, StashAway. We're lucky enough to get StashAway Country Director Wong Wai Ken on the show today because StashAway introduced today the thematic portfolios. It includes 3 mega themes: technology enablers, the future of consumer tech, and healthcare innovation. So Ken, I'm sure you are as excited as I am, largely because when we deep dive later on in this conversation, there's a lot of companies that I can now invest via StashAway. But let's do a zoom out first. Let's talk about the thematic portfolios. Why are you launching this?
Sure, and it's good to see you back in the studio. The wardrobe and makeup is doing a great job.
With the hair and the makeup but you know, previously it was a bit scary to come to the office, but now, you know, with the 90% fully vaxxed adult approaching, you know, a lot of people feel more comfortable. But yes, I made it a point to come to the studio, by the way. We could have just done this in the comforts of my living room, but no, yeah, this has to be done back to the studio.
Yeah, part of the reopening theme, right? So, well, why launch thematic portfolios? Well, I guess it's, you know, a combination of 2 things. First, I think everything has been said about technology and how it's changing our lives. Our lives have been impacted since the early 2000s. We are products of advancements in technology, and we are seeing the future foundations being built right now, and these technologies have profound future effects in our life. But another reason why we introduced it is because our investor base, they're very engaged, they're plugged in, they're very aware of global markets. So we always get questions like, when can I invest in Tesla? When can I get exposure to ARK fund ETFs? When can I get some blockchain or crypto exposure? Well, thematics is meant to address all of that. So that's, you know, here it is for your consideration.
Let's talk a little bit more about the ETFs being the key movement following this revolution. There's a lot of conversations on how ETF is gaining popularity. Do you feel that StashAway as a company is gaining popularity? How's your asset under management right now?
It's very healthy. By the way, we launched in 3 additional markets. That's Thailand, Hong Kong, and Dubai. And they are taking off as well. And I think that is a combination of the fact that in those markets, very similar to Malaysia, traditional investing methods are very expensive and don't offer real international exposure. So that's why we think ETFs are a great vehicle to get exposure to broad-based indices like the S&P 500, broad-based sectors like consumer discretionary or energy, and also thematic portfolios, which we are going to discuss today.
Right, let's talk about the thematic portfolios. We'll start off with the technology enabler. This show has always been about the cross-section between technology and business. There's a lot of companies that I'd like to talk about. Tesla, the social media companies. Interestingly enough, late last week, AWANI has been you know, carrying the Malaysian flag proud and was named as the #1 drone operator in the world, clearly becoming a flagship operator. Why do you feel that the technology enabler has to be made a subsection or a portfolio by itself?
Right, because I see technology enablers as the infrastructure that we need for other technologies to succeed, right? There's a lot of underpinning technologies that are not just being widely adopted through their S-curves, but they're also converging as well and influencing each other, which is why this is so exciting, right? So tech enablers being the infra required, so companies like AWANI and Qasem, Malaysia's first tech unicorn, you know, things like Grab, you know, how they have succeeded is because of things like semiconductors, cloud. But what is the future, right? The future is going to be things like AI, robotics, blockchain, things like that. So that's why these 3 mega themes are meant to encapsulate a lot of smaller themes as well.
Okay, then the question now is, how do you pick and choose which one gets a little bit more weight, which one's a little bit less? Or is it still going to go with the robo-advisory notion where everything is automated and you will rely on your algo on the selection?
Well, our CIO, Freddie Lim, always takes into consideration risk management, right? So it comes down still to risk and reward. While a theme may be particularly exciting to me and you, when you blend it together with other ETFs and other exposures, it's really about, is it really worth the risk? Especially since these themes are very concentrated and they are very volatile. So when we combine them with other ETFs that express these sub-themes, for example, there's an ETF for AI, an ETF for robotics, one for semiconductors, one for blockchain, and so on, and we package it together with different weightages, you ultimately get a really diversified portfolio. And then there'll be other people who said, yes, I want some exposure, but I don't want 100%. So that's where we introduce, protective assets like bonds. So the whole portfolio is diversified, and you don't need to go and buy a bond fund, go and buy a safer fund to balance out your thematic exposure.
Another portfolio is, of course, the future of consumer tech. It says here that you guys invest in everyday consumers, including e-commerce, fintech, gaming, internet, mobility, and social media. Some of these items, particularly social media, actually has brought about some ESG concerns. Last week, we saw how the Wall Street Journal published some news that Facebook knew of the mental health issues that Instagram brings to teenagers, particularly teenage girls. These kind of ESG items keep on popping up when it comes to social media. How do you balance the possible beta that you can chase after this investing in consumer tech, while at the same time try to maintain the S element within the ESG?
Yeah. Good point. I think a lot of companies, when they are young and they are in the startup stage, they want to do good, right? I'm sure you remember that Google's motto or vision used to be "do no evil," right? And a company like Facebook was all about connecting people. Instagram was all about capturing moments. Tesla was all about making the earth green, right? And then as they grow along, as they get influence and they become essentially tech monopolies and are extremely profitable to shareholders, as the share prices have suggested, they now need to look at their ethic, right? Their ethic. And as we have these revelations, these uncoverings, we're finding out about these things every day. I think it's incumbent upon shareholders and the firm to do something about it, because ultimately, I think the firms that show a strong ESG track record do provide alpha, right? If you have investors, especially institutional investors, that have a conscience, that have an ethic, they will shy away from names like this. So these companies, when they're large, when they're monopolies, and they affect people's lives in a very meaningful way, like you said about the psychology for teenage girls, right? And I'm a new father as well. I care about these things. I think these firms need to reform over time, right? But the big picture is that consumer tech represents the evident technologies of today, right? Things like fintech, gaming, driverless cars like Tesla, and also some in China. But yeah, very exciting themes in this thematic of consumer tech.
Yeah, we'll touch into China shortly, but for now, we'll just go one more into the final thematic portfolio that you guys want to introduce, which is healthcare innovation. There has been a time when there is a debate whether or not healthcare innovation has the kind of propensity to grow. But following the pandemic, everybody is looking at healthcare themes from end to end, anywhere from pharmaceutical companies to health solution providers, to outright doctors making house visits. There's a lot of things that can be done in the healthcare innovation element. One Malaysian company, Pharmaniaga, is also trying to move from fill and finish kind of role into vaccine discovery as well. So you can see that the demand, the pent-up demand for providing healthcare solutions is just boiling over following the pandemic. Do you feel that this is the time to invest heavily into healthcare innovation?
I think so. So in the past, when you talk to fund managers, they would say that healthcare plays the stable part of their portfolio, right? It's a stable, recession-proof, counter-cyclical space, right? Whenever there's a recession, people still fall sick. But I think at this point where you have these technologies like biotech, CRISPR, which contributed to the mRNA vaccine, advances in immunotherapy. The costs are all coming down, and you are seeing R&D really pay off in a way where now healthcare is not just a defensive sector, but also a growth sector. And I like to call this portfolio the COVID-proof portfolio because, you know, I got Sinovac like a lot of Malaysians. You maybe got something else. My wife got Pfizer, but like in this portfolio, you have all the names of these vaccine producers. You have J&J, Pfizer, AstraZeneca, and these are names, Moderna, sorry, I forgot. All these names are names that you want in your portfolio, as well as the other sub-teams you talked about, like telemedicine and increased R&D to create your own vaccines. So I think there's going to be a lot of capital flowing into this space, and the technology is making it cheaper for these pharma and bioscience companies to create better products, better vaccines, better medicines, so we can essentially future-proof ourselves from future pandemics.
Okay, the thing about my show is that sometimes Securities Commission watch this show, so I'm entering into another element here. So both of us got to be like, appeasing the SC people here. How do you feel investors should approach in terms of investing in thematic portfolios versus the normal, products that you guys have, or any other products out there in the market have right now, versus the kind of selection that they need to do if they want to choose thematic portfolio? That's first question. Second question is, which of the three should they feel that they should give a little bit more focus on? What would be some of the thinking going into the investment decision making here?
Sure. So great question. We focus a lot on investor education, and how you approach the investment in this thematic portfolio is as important as when you make any investment decision. So unlike our global ETF portfolios, which have different risk levels and multi-asset, those portfolios are meant for your core portfolio. Those ETF portfolios are meant for the core holdings of your overall portfolio. These thematic assets are more suited to the aggressive portion of your portfolio. They are more volatile. They are more risky. So there is significant upside, but you have to have a long-term horizon, something around 5 to 7 years, not less. And how you would make this decision is depends on the individual. If they are far away from their retirement or they are midway through their career, I think they should really see this as something that's long-term and is suited for their kids' education or retirement, which is at least 5 to 7 years away. And then how much exposure do you really want, right? So I think ultimately each individual has to discern whether it's 20%, 30% as part of their aggressive section of their portfolio. And then which themes do you choose? Well, I think it really comes down to what your own view is. Of course, we're very bullish about all three themes. I've invested in all three themes. But I think if you're a medical professional, then you have a much better understanding of healthcare. If you work in fintech like I do, then you have a better view. If you work for AI or robotic or cloud company, like if you work for Aerodyne, for example, then you would probably choose tech enablers. So I think if you think that these themes would change society, then invest in those themes, right? If you are uncertain and you think that you want to hedge all your bets, then choose 2 or 3, right? But like I said, just want to repeat, they're very risky, and you should do your research before investing and look at a long-term horizon before committing.
Yeah, that's the point I'm trying to get at. Investing in all three doesn't mean that you're hedging your bets. Investing in one also doesn't mean that you're hedging your bets. This is just another element of investing that you need to think about. There's a lot of other investment products out there on that you can think with lesser risk profile, but perhaps less returns associated with it. It's interesting that you brought about some inside baseball when it comes to those working some industries and would have some affinity towards some other industries. But for a person like me, we're working in a TV station. I don't own drones. I don't know anything about medicine. So how do you, what would be some of your advice for folks like me that might not know much about healthcare innovation, consumer tech, tech enablers, But we get our news from the press. Nothing extra inside baseball there. What advice would you give to me, I suppose, when it comes to selecting these kind of thematic portfolios?
Well, do your research, right? No shortcut way, and I think people have actually have more of a knowledge base than they think they do. So it might be a top-down approach where they like a particular theme, they have an interest, they gravitate towards news, they watch YouTube clips about these things, or they like particular firms. Like if you're a fan of NVIDIA because you know that there is a semiconductor shortage, or if you like the FANG stocks, or if you like Tesla, then you might pick the portfolio that has the biggest weightage towards those companies that you already know about. And the thing about this investing exercise is that you're always learning, right? So once you understand who the players are, who the fund managers are taking a bet on, you will then learn about other ETFs, other firms, and that will help you have continued conviction in what you've chosen. And then maybe you have more confidence to add to your position. But over time, you will be also more discerning. Maybe you see news that is really disruptive towards a particular sector. Maybe you follow crypto and you see the SEC chair really clamping down. Then you can also make a informed decision, educated decision about when to cut loss, when to sell, when to trim down your exposure because of risk. So it's a learning process, but it should be enjoyable, right? It should be something that piques your curiosity, right? And if you're curious people, you're continuously learning, then you will take advantage of these future winners and companies that will benefit from these technologies.
Fantastic. We'll go for one short break before we continue our conversation with StashAway.
Adakah penyelesaian rangkaian awan dapat meningkatkan hasil perniagaan anda? Dengan Maxis Right Cloud, pasti ada rangkaian awan sesuai untuk digunakan dengan setiap aplikasi. Akses semua pembekal rangkaian awan. Kawal sistem rangkaian awan sepenuhnya. Lakukan integrasi sistem IT di-premise dengan mana-mana rangkaian awan. Jadi, jangan pilih rangkaian awan sembarangan. Pilih Maxis Right Cloud untuk membantu meningkatkan hasil.
Ayuh keluarga Malaysia. Kita bulatkan tekad dan bersatu hati untuk terus memelihara serta mempertahankan kedaulatan negara. Sebagai keluarga Malaysia yang besar, kita harus bertoleransi dalam semua perkara. Hormat menghormati serta mengekalkan perpaduan rakyat yang berbilang kaum, agama dan bangsa, serta integrasi nasional silang budaya adalah tunjang kekuatan kita sebagai sebuah negara bangsa yang berjaya. Umpama selembar benang, dikait, ditenun dan dijalin, akhirnya menjadi kain yang sempurna indah.
Of StashAway Malaysia. Ken, let's talk a little bit more about the markets right now, from developed markets to emerging markets. We touched a bit about China. The thing about China is that they're going through a little bit of a clampdown, Beijing, against some tech companies, particularly some companies that might have global reach. This has given a lot of coverage, particularly amongst Western press. I just want to get a feel of what you think about the Chinese market right now, particularly in the realm of investing into companies there.
Yeah, so China itself is a theme, right? Like if you look at the early 2000s, how fast they've grown, how fast they've urbanized, how fast they've increased technology capacity. It's really been a modern marvel, but investing there has been volatile, to say the least. And I think the Chinese government ultimately has the say when it comes to policy and how that affects capital markets, right? How liberal they want to be, how draconian they want to be. And I think because of their protectionism, they've essentially homegrown these mega unicorns. And then what they're seeing is the increasing inequity that these companies have, not over their rivals, but also it's creating social problems. If someone is richer in China, they can afford more gaming, afford more after-school tutoring. and that will only exacerbate issues down the line. So China being far-sighted and having a social kind of metric to how they govern, they want to avoid the ills of the American tech companies, right? They want to clamp down on monopolistic behavior. So I think that signals that they care about society, yes, but they also want to level the playing field for different tech companies there. Of course, there's a lot of short-term pain, but I think when you really look at the numbers, companies like Baidu and Tencent and the top weightages of the Chinese tech ETFs, their earnings are still climbing. They are still growing. And the consistent message that we get from tech Chinese CEOs is we are happy to comply with the regulations because essentially that is their way to success. There is no two ways about operating in China and going against the government. So the Western media is more than happy to pile on the fear and uncertainty, right? But if you really look at the earnings of these Chinese tech companies, they are still growing. So I think there's a valuation opportunity here in the China tech space. And the Chinese government has also made overtures to the investing community, the tech community, and CEOs in China to make sure that they are happy and they are heard. So I think that we've really seen the worst of this clampdown, and the Chinese tech sector is a good place to be in terms of valuations.
Then, of course, when we look at the months to come post MCO, global recovery is coming back. One survey by Bloomberg shows that countries like Malaysia and India is expected to recover better than earlier expected. Our numbers are reaching 90% adult fully vaccinated. We're now starting to vaccinate our teenagers. My daughter is in the running for getting her vaccination next week even. So do you feel that better days are coming and the bleak days are behind us?
Yeah, I think there will be interruptions to the reopening, and we have seen this, right, in terms of government policy reopening too early or too late. We are seeing the Delta variant rear its head in different parts of the world. So yes, I think that the worst is over, but I think the rebound will be very, very cautious, right? So there are still some risk factors to the investment landscape. Earlier this year, inflation was indeed a fear, where the low base effect of last year kind of showed us that inflation was really high. We'll see whether that persists or not. But I think ultimately the worst in terms of COVID is over, and then we'll be looking towards more milestones. Will the borders reopen? Will travel be allowed again? And then ultimately, will GDP be back where it was? But I think it will be different. And to come back to the thematic theme, technology will enable a lot of the productivity growth because we will do things differently from now on. I think, business travel won't be at full capacity, traveling won't be at full capacity, schools may change. So ultimately, I think the pandemic will have a lasting effect, and our way out of it will be slow and uneven.
Two things I want to touch on before we end this interview. One is, of course, the infrastructure. All this depends on good internet connection, people building towers, edotco, for instance, or any other tower builder. And then, of course, 5G connectivity and the companies that do it, anywhere from Ericsson, Nokia to Huawei. Will the thematic portfolio touch these two companies as well? These two sectors, pardon me.
Yeah, ultimately, this kind of exposure will be through cloud computing, which is in the technology enablers space. There's also a lot of tech exposure, which is currently already commercial inside the semiconductor space. Companies like Taiwan Semiconductor and NVIDIA and Oracle, Microsoft, Google. So I think a lot of these companies will ultimately be the backbone, right? And you mentioned Huawei just now as well, which we come back to China's tech sector. China is seeing that it can't rely on Taiwan, it can't rely on the US, and for NVIDIA. So what it wants to do is build its own capacity inside its own country, and then also to advance its own progress. Driverless cars that Huawei said it wanted to build, 6G, however fast that may be compared to 5G. So I think that exposure in this space is really important. And then there'll be some sort of tech arms race where we'll see competing technologies out of the US and China. And as an investor, the best thing is that you can have exposure to all of these things and ultimately not have to pick individual winners.
Sorry, tech arms race sounds very both scary but exciting as well to be an investor in. Do you feel that this is going to benefit the investor if this thing happens? Well, in a way it is happening, but yeah, between China and US seems to be a scary thought, right?
Yes, that's why you need to future-proof your portfolio. You need to look at what is in your portfolio right now and ask yourself, will you want to be exposed to the current companies that make a very large weightage in your portfolio? So there's a lot to be said about the eventual losers about this space as well. But if you have an eye on the future and you understand the trends that are coming our way and how it would affect the potential winners in the future, then ultimately your portfolio will do very well. There is definitely an element of creative destruction that will happen. And it's you have two choices. You ignore change because it's too much to learn, too lazy to take notice of these things, or you become an informed investor, an informed citizen of the world, a consumer of technology and all of that, and ultimately position yourself and your portfolio for the future.
I'm lazy. That's why I don't want to invest in single stocks. That's why I choose ETFs all the time, right? I mean, who has the time to study all these kind of companies, right? Do you feel that the ETFs are going to be up to mark in terms of, particularly your portfolios, up to mark in terms of assisting us, the investor, who might either be, one, lazy, two, not be informed of the kind of environments that are currently in, and of course, three, you want this to be done autopilot, right? I want to do other things in my life, not just to keep track of my portfolio. Do you feel that that is the solution, that the kind of value add that you bring to the table for potential investors?
Yeah, absolutely. The ETF selection is something that we pride ourselves on. There's over 5,000 ETFs listed. And I think going through them one by one is as onerous almost as picking what stock you want to expose yourself to. So we've done all that hard work for you. We've constructed a portfolio for you, and we will keep an eye on the market and communicate and engage with you. So as a customer, you would get monthly statements and communication articles about what's going on in your portfolio. Right? If we make a change, why do we do it, right? We also have different channels to engage with you and to educate you. So we have a podcast on Spotify. We also do market commentary weekly on YouTube. So a lot of these things is a matter of being engaged and listening to wherever it feels convenient to you, learning along the way, and ultimately still sticking to your long-term goals.
Fantastic. Ken, I wish you all the best, and I'm sure this is an exciting days that lie ahead. But of course, stay safe, stay healthy. That was our conversation with Wong Wai Ken, the country director of StashAway Malaysia. If you've missed any part of this interview, just head on to astroawani.com, look for StashAway or look for Notepad. Until then, thanks very much for watching, and goodbye.